Well, now on to earnings. Starting with the banks, State Bank of India delivered stable second quarter numbers, profits in line with estimates. Asset quality is the one that has come in stable, and that's very important. Gopika is here to take us through the fine print. Tell us, Gopika.
Well, it's the second consecutive quarter where SBI has reported a growth in profit. The net profit grew by 30% to 3,100 crores, more or less in line with our estimates. What helped this growth in profit is firstly a 40% growth in non-interest income. The fact that the bank has been able to bring down its operating expenses, in fact the growth in operating expenses, and also the low base effect also helped the bank report a 30% growth in profit. Asset quality continues to be a concern for the bank, although the fact that gross NPAs marginally declined from 4.9% in the first quarter to 4.89%. The pace of addition of fresh slippages in fact has come down from 9,900 crores in the first quarter to around 7,700 crores. Restructured accounts also have marginally increased to around 4,500 crores. But the fact remains this time is that the recoveries, upgradations, write-offs have been lower this time as opposed to the first quarter, largely because the bank has not made much sale of NPAs to the ARCs. But that aside, NPAs seem to be stabilizing at this point in time, but the management continues to maintain that it is a bit of a concern going forward and do not expect much of a recovery in the next 12 months. On the operations side, the negative was NII growth. It was a bit muted compared to the first quarter, where we saw 15% growth and now coming down to around 8% growth. This is largely because of poor credit pickup this quarter, 9% credit growth this quarter, and the management revising their full year credit growth target this year to around 11 to 12%. So clearly the management does not expect any demand or revival in demand for a credit pickup in the next 12 months. Let's hear out what the management had to say on this.
We are hoping that this year this quarter we have been able to manage without too much of a loan growth. So hopefully, as the loan growth kicks in, and also if we believe that the yields will come down and therefore, the treasury will also be able to contribute a little, hopefully we will be able to show good numbers.
This quarter you've largely benefited from a low base. Going forward, are you hoping that credit growth is going to be low, but what are the other factors that you will look at closely and monitor that so that profit growth, that you will report a profit growth?
See, the numbers will come from the fact that we'll have to keep an eye on expenses. Expenses are something that we'll have to keep a hold of. On the credit side, what we expect is that the fee income that we are seeing, that we'll be able to maintain a growth in the fee income. And also, as I said, from the treasury side, if we can manage to get some treasury profits, then those would be possibly the areas from which, we can look to see some better results.
All right, that's as far as State Bank of India is concerned. Some silver linings definitely showing up over there. But let's continue talking about banks, because, of course, there's more news that's come in. And this is, of course, to do with